Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, May 26th. Hope you guys had a great, wonderful, long weekend here with Memorial Day weekend here. It was wonderful here in SoCal. We got a couple items here on the economic calendar, so let's kind of delve right into it. We'll start off the first two are home price indexes, which kind of gauges the appreciation levels of homes. The first one is the Case-Shiller Home Price Index. They have two indexes. This one happens to be the U.S. national one or national one. They also have one where it's the 20 largest cities in the U.S. And these are year-over-year appreciation levels. So in February, we had a 4.2% year-over-year appreciation level. That increased to 4.4%. Now, the other index we have here is the FHFA Home Price Index. Now, this is a index that gauges the homes with conforming loan limits here, and this had a year-over-year 6.1 home appreciation, but it did drop a little bit in March down to 5.9%. Now, of course, we're still not. This is all pre-coronavirus pandemic levels, so we're not really sure how things were impacted. We would assume that it has gone down during that period and then come back up, even though we have seen sales, but I'm sure the sales have dropped considerably as we've been seeing like existing home sales, new home sales, and stuff like that uh, drop a bit during the March and April area. Consumer confidence went up slightly. We had an 85.7 back in April. Um, Forecast gone for 86.8. Came in pretty close to expectations, but not quite as high at 86.6. And last but not least, we got new home sales for the month of April. So we had 619,000 annualized units back in March in sales, and it was supposed to drop dramatically down to 480,000 in April, and it continued. It actually went upwards to 623. So it shows you that home sales are still doing pretty well for the most part. Now we had a slight dip though in that period between March and April, but things are kind of moving along. People are still buying homes. So let's kind of take a look here at the headline news where stocks are up quite a bit today. Dow's up over 600 so far this morning. Part of it is a big part of it actually is optimism on the first two items here. We got vaccines coming up. We got this company called Novavax talking about how they're starting the phase one on human beings, and was raising good uh, a lot of optimism there, as well as Merck's getting into it and acquired a company and are working on vaccines as well. I think they've got like two different ones that they're working on and trying to get the way through. So that's creating a bit of optimism in the markets, as well as seeing some data picking up. They said that airlines are picking up a little bit, traffic, people going out to restaurants, stuff like that. So we're starting to see a little bit more improvement in those areas. So those are creating, again, more optimism with the investors that things will get back on track here, hopefully sooner than later. However, we do got some tensions continuing to grow with China. There's been threats of possible uh, uh, more what's we call it, the tariffs on Chinese goods, as a penalty for the coronavirus, the lack of information that was being put out there. They're still quite upset about China's lack of communication during that process. They're also uh, Congress was also putting through a bill that was penalizing, maybe creating a list of Chinese corporations of the human rights of the Uyghurs, the human rights abuses of the Uyghurs, that they will delist that, which means that American companies cannot do business with those companies. And of course, China is crying foul on those. And then of course, there's talk about what's going on in Hong Kong as well. So those are creating some tensions between the two countries. That is leading possibly towards a Cold War. We'll have to wait and see. Um, but yeah, I mean, things are heating up a little bit between the two countries. Let's take a look here at the markets. We got the bond market is down about 8 basis points, so not enough really to change interest rates, but we are testing the 50-day moving average. It's something we want to watch as we get a little bit squeezed as the 25-day moving average is moving down a little bit, 50 days moving up. We're testing the floor. If we break below this, as you can see, we got quite a long ways here where we can rates could jump up a bit more. So, but if we can keep this and hopefully even get above the 25-day moving average, then we could potentially, of course, uh, see some improvement in mortgage rates. So this is where we are right now. Fed will be purchasing approximately $4.2 billion in mortgage-backed securities today. So just buying enough to kind of keep it afloat. So I don't know if that's going to be quite enough to give it any boost that we need. But right now the stocks was kind of dragging it. The money's flowing from bonds into stocks right now. So let's go ahead and take a look here at the 10-year Treasury. 10-year Treasury is up a bit. It's just hitting the underneath the 50-day moving average. It's 50-day moving average, and that is the at about approximately 0.7% here. All right, so that's pretty much the wrap. Mortgage rates remain unchanged. If you guys are in California, we'd love to hear from you guys. If you guys are looking to buy or refinance, you can either reach out to me by direct message me or email. Email will be the quickest. If you guys are ready to go, we do have a link in the description. You can go and start completing, answer some questions, as well as upload any documents that you might have, and we can see what loan programs will be best for your needs. So we got quite a few investors we work with quite a few different loan programs that are available. As you may have heard, loan programs have come in and out, and you need somebody that can help guide you through that, let you know what are out there, what's not out there. Some people don't have everything, and we do have quite a few things that we could still help you out with. All right, give us a try. You guys have a great rest of your day. Thanks so much for watching, and we'll see you in tomorrow's video. Bye-bye.